Hi, this is Devins Financial Weekly Stock Analysis Newsletter. Today is January 16th, 2016. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. U.S. market is still in a correction, and selling has been intensified last Friday. I'm currently in cash. I have traded on the short side through the reverse ETFs, but I got out on Friday. I got out all the short position. Let's take a look at market indices and the charts. The German DAX index is still in a downtrend, and right now it's approaching the last low made on the August and October. Nasdaq monthly chart I shared with you last week. Nasdaq, the long-term monthly chart is not optimistic. We had recently broke the 12-month moving average, which is annual moving average, twice. One time is last August we broke it. The problem is when we rally, it did not reach previous high and came down again, broke the annual average second time. And this is a bad sign. In the past, right before the major bear market, and what happened is a broke annual 12-month moving average, rally up and broke down again. The second rally did not reach the previous high. Same thing as a 2008. Second rally did not reach previous high and came down. So we have to be very careful. We have to play defense for this market. This market has a potential to develop into a bear market. This correction does not look like previous correction, and it came down and rallied back up, take off previous high. So in the past 7 years, every time Nasdaq break 12-month moving average, it rally back up and rally back higher than previous high. But this time it did not. That is a bad sign. Nasdaq weekly chart, as we can see, it's very close to the last August and October. It made a double bottom. So right now we're very close to there. So it is possible we may have a short-term rally, but it doesn't guarantee. Nasdaq daily chart, as you can see, it's close to the previous low. This area, which is last August, we made a one-day reversal, and then October, we came down to the same point and rally back up. This is a double bottom, and we're close to the last August and October's low. And on Friday, the volume is really high, but the market did close down. So it's basically still, this market has a lot of sellers, a lot of fund managers are still selling into the market. We have not seen the convincing buying, so that's not a good thing. And mid cap, as you can see, mid cap just broke down below last year's double bottom. This is last August and October. It made the double bottom, but mid cap just took it out without even a slight bounce. It just fall straight through down. Same with the small cap. I'm going to show you the small cap's monthly chart. As you can see, small cap is also making some kind of a almost like a head and shoulder pattern on the monthly chart. It also broke the neckline. So small cap is already in the bear market. It looks quite similar with this 208 and as well as a 2000. Well, 2000 small cap is not as bad as a Nasdaq, but the 208 small cap has a big job. So we can see this is small cap weekly chart. It's already broke last. It definitely broke last October and August low, and also broke 2014's low. So small cap is in a bear market, basically. As you can see, the small cap is below 50-day moving average, below 200-day moving average. So when the market has a small cap underperform large cap, it is a characteristic of a bear market because fund does not want to park their money in a small company because it's perceived as to be more risky. So the mutual funds, hedge fund, they move the money from small cap to the large cap. So that's a sign of, in their view, the market is not doing great, or they perceive market will not do well in the near future. So that's you can see these characteristics in the bull market. Small cap will outperform large cap, but in the bear market, small cap will underperform large cap. So let's take a look at the SP 500 large cap. This is a large cap index. As you can see, we're right at the last August low. So here, this is a last August low, but again, Nasdaq also did not reach the last year's high and came down. So this is also a bad sign for the large cap. This is a weekly chart. Let's take a look at daily chart. SP 500 daily chart. We're right at the last year's low. So next week we may have a potential to bounce, but there's no guarantee it will bounce. If it bounces, then it will be we have not seen the follow through. So basically, if next week if there is a rally, does not mean the downtrend is over. We have to see the rally has a confirmed rally, has a follow through, which is IBD's definition. You have to wait for after the fourth day of the attempted rally, then you have a large percentage going up with a higher volume than previous day. That will give you a follow through. That has a potential to reverse the downtrend. For now, we have not seen that. All we have seen for now is the bear market characteristics. But IBD has not declared it's a bear market, but from the chart, I suspect we're at the beginning of the bear market, basically. SP 500, and again, okay, that's a daily chart. Now take a look at the gold. Gold is still in a overall downtrend. However, we have seen a subtle trend reversal right here. The daily chart, gold rally from the low and break this trading range. Now pull back to the trading range. If this 1080 can be held, this is a trading range. If the high of the previous trading range can be held, and gold rally back up, now gold will have a potential to reverse the downtrend. But for now, we have to watch it very closely. Silver still in a downtrend. Gold mining stock ETF pull back to the previous low. We have to see if this can hold. This low can hold. And I was long GDX last week, but I got stopped out as the GDX came down. But now I'm thinking of buying this. But if you were to buy GDX, $13 or right below $13 will be the stop order price, because you see the 12.8 and 12.5, this range has been a support for a long time. If this range get taken out, if the GDX falls through this going down, that would be a bad thing. So you have to stop. You have to have a stop order if you buy the GDX and this price. But this price has a potential to hold and go back up. US dollar, this is in a short-term uptrend. Crude oil is a very deep downtrend. Energy ETF downtrend. China stock, Shanghai Exchange Index monthly chart. China is also reaching last year's low, 2050, but it doesn't mean it's going to stop there. So China overall, this is a monthly chart. The overall China market is in the bear market. Weekly chart, as you can see, it fell down and rebound and came down again. So it doesn't mean this low can be held. It has a potential to fall through and going down. So any bounce in the China market is opportunity to sell. It's not opportunity to buy. FXI, this is a ADR. It's a 25 China large companies. They are traded in Hong Kong, and FXI is a ETF for the American investors. And downtrend, very large downtrend, very steep downtrend. The downtrend actually intensified. I was shorting this last week and I got out by Friday. So by Friday, when they gap down, that's opportunity to get out. IBB is the US biotech downtrend. US real estate, IYR, look at this. On Friday, it broke down. This broke the support. Uh, it was in a trading range, but Friday broke down. Airline stocks broke down. Last week, I already informed everybody it was breaking down. So continue breakdown. Copper price downtrend. Nothing changed there. Mortgage bond price broke up. This is a broke up. It broke above this double bottom. So mortgage rate is coming down. What's going on? Does that mean the Fed will reverse the rate hike? We don't know. So for now, looks like the mortgage rate, the interest rate is actually coming down. Semiconductor ETF, semiconductor broke down this support, continue coming down. Social media breakdown. This is a $19 was the previous support and came down. Solar stock ETF came down. It's also in downtrend. Financial ETF, this is something we have to pay close attention. Financial ETF is coming down, it's broke down. So as you can see, all sector in US, the stock is coming down. So we are in a very bad, well, you call correction, but I would say has a potential to develop into the bear market. We don't know that for sure, but we should guard our account and guard against it. I'd like to show you a couple stocks to watch. One is stocks still in the uptrend. There are only two stocks on this list. Those are potential long stock. But I would not recommend to buy stock right now. I would just say watch those stocks and wait until market go back up to the uptrend. For now, market is in a downtrend, therefore we should not buy any stock, but we should watch. We should watch which stocks are doing well, which are not. Intuitive Surgical, this is a stock almost in the all-time high. It just recently break out from the cup handle. Let's take a look at the leaderboard charts. This is a weekly chart for Intuitive Surgical. And as you can see, the stock has been flat for a prolonged period of time, for many, many years. The stock has been like a flat. But recently it broke above a cup with a handle base. And this is the first stage base. That means the risk is much lower than the third or fourth stage base. So as you can see from here, we actually broke out on Wednesday, but they pull back again. Use your own discretion. I'm not sure. I'm not saying you cannot buy this stock. I'm not saying you have to buy this stock. It just you decide on your own. But the stock is breaking out in the face of the downtrend. So that show you the relative strength of this stock. And from the volume and the institution buying this stock. RAI, this is a defense player. This is a, well, defense stock. It's not defense, military defense. It's not that. It's in the tobacco industry. So this tobacco industry usually do well in the bear market. And that's where the fund manager likes to park their money, and because the demand for its product is not sensitive to the economy. So this sector is doing well in the bear market. Right now, RAI is still in the uptrend. That's all I can say. And I don't have this stock. Okay, that's Anyhow, and now we have stocks to short. Those are the stocks you cannot long them because they're in a downtrend. If you know how to short, you may short them, but you have to time them right. You have to enter the short position when the market started going down. Right now, it's a little too late because the market has gone down for 2 weeks. So the the bounce is high probability even now. The rebound from the previous low, which is SP 500, as you saw the chart before, we may rebound now. So it's not a time to enter the short position, but watch the list. And there's another stock I took out from actually IBD took it out from its short list, which is a Palo Alto Network, because this stock has shown support. Let's take a look at the chart. Short list, Amazon downtrend. As you see, Amazon broke 50-day moving average. It just come down. They don't look back. They just keep coming down. The reason is because there are more sellers than buyers, especially institution investors. They're selling this stock, so you can see the volume on the down days are very high. Those are the institution investors are selling it. DHI also came down and downtrend. Facebook downtrend. It broke 100. $100 was the support for a long time, for a few months. Now it broke down, so it's hitting the 200-day moving average. Google broke down 736. That is the previous support. Now it came down. As you can see, the volume on the down days is high, so institutions are also selling the Google. Integrated device technology broke 50-day moving average and came down and heading into 200-day moving average. IMAX came down, downtrend. It has a little rebound, but just came down again. LinkedIn just never looked back. It just came down. So, and Lowe's came down, downtrend. Papa John's came down, very intensified downtrend, very steep downtrend. Signature Bank came down, downtrend. Those are the stocks. Right now they have already come down a lot, so it's not a good time to enter the new short position. However, if they bounce, if they rebound into resistance, you may start a short them. And the third list is a stock, just one stock, Palo Alto Networks. This stock finds support. Looks and Thursday looks like they're higher volume than previous days. See, this Thursday the stock went up and the volume is high. That means institution are buying this stock. So there's some institution are buying this stock. It doesn't mean you should be buying this stock. However, it's something and be taken as a sign that if you're shorting the stock, maybe it's a time to get out. Maybe you should not continue short the stock if you see the sign like this. And also, we're right now at the previous support 150. So if we break down 150, then you can short. But for now, probably it's a time to take the short position off and watch the stock for the potential long candidate. What to do in this market? Cash is the best place to be in. Right now, it's too late to enter the short position, and it is too early to enter the long position. We should wait for the market confirm the rally before we enter the long position. So just stay in cash. That's all for this week. See you next week.